Hello all, welcome to Easy Investing. Today, wanted to share my 5 investment practices that I have been following in the past few years. If you're a hustler trying to get your investment to be smooth, irrespective of your environmental aspects like having a work or stressed about your work, your kids, your studies, you should have your investments and your practices to be smooth and standardized. These are 5 tips and tricks that I have found and should definitely help. To start off, first thing, review your expenses and your income. You need to check if you have been overboard with your expenses and where you are with respect to your expenses and your income. So one thing that I do on a regular basis is that I log on to my Mint Intuit account. I go through the budget. If you look at the budget tab, I would see what's the income. Did I get my paychecks in place, classified each and every of my expenses. Month, every week, couple of days, I do log in far along with respect to my expenses. So that's something which would definitely help you. Second thing I have started in the last 2 years is to have an automated recurring investment. I do have a daily recurring automated investment. I use Robinhood. It's as low as $10 or $20. So what these recurring investments does is automatically purchases fractional shares. So you don't have to own one complete share. You can say that for $10 I want Amazon to be brought at every day. It actually, the trade happens at 12 o'clock. So as on every day 12 o'clock, how much ever the price for that stock is, you would get a fraction of that stock on that day. So that's how I have been building on a couple of portfolios that I do own is Amazon, Berkshire, Tesla, Apple, and any stocks. I preferably go for tech stock. You can choose any of the top 500 index stocks to start building your investment. And the main crux of these recurring investments is that averaging. It's similar to how you do your averaging. So every day you invest $10 into Amazon stocks, means that in your ups and downs you will continue to buy Amazon, and in a long term this will definitely be much effective investment. And this is something which will occur on a daily basis. You don't have to worry about it. You don't have to worry about whether you entered low and so on, because the averaging does help you in the long run. Remember one thing, when you go for these automated recurring investments, ensure that you have a zero fee or a zero commission entity that would help you buy these stocks. Okay, moving on to the third one. If you have your kids and they are small, start building your 529 investments. That's something that I have started pretty late. However, in the past few years, I have ensured that on a monthly basis, I do have a small investments to my kids' 529. It can be as low as $10 or $20 every month. Point is that over the years, or 10-15 years, these will compound and should give enough seed money for kids to start their college. Few tips that I follow in here is I put as low as $30. I invest in index portfolios so that I don't have to worry about the day-to-day ups and downs of each stock. And then based on their age, I do put age-based portfolios as well as an aggressive growth portfolios. I use Vanguard for the 529 investments. In Vanguard, you can proportionate even the $30. You can say that 20% of it should go to my index, another 40 to my growth, and another 20 to age base. So you can completely control. We discussed about the recurring investments. Keep an eye out for what are the key things that the entity that you use for these recurring investments. Ensure that there are no transaction fees for buying or selling. So an example would be for 529 in the Vanguard or 529 investments. If you buy Vanguard funds, it comes at zero fees. So that's something, there is no transaction fees. So that's something which you can definitely go for. I use Robinhood for my regular recurring investments. And again, you can buy stocks and sell stocks. There is no transaction fees or commissions in Robinhood. The next thing that I look forward is a low expense ratio. So, what does an expense ratio mean? An expense ratio reflects how much a mutual fund or an ETF, um, so how much you pay for the administrative cost. Okay, so that's basically what the expense ratio means. I preferably go with any funds that have an expense ratio less than 0.2 percentage. So, like the ETF that I suggested, the Vanguard's aggressive growth portfolio, it has an expense ratio of 0.14, which is very well within my range. So, what's that I learned is try and max out your 401k investment in the first few months of the year. You would ask why? Why not disperse it over all the 26 paychecks that I do get? The reason being, the more time you have invested into the 401k, the money will compound for more. You have more time, and time is the most important variable here. So, the time would help compound your money. The second thing that I have learned is the risk of job security. So, who knows what happens after 6 months or 7 months? You don't have a job, you won't be able to invest into your 401k. So, in order for us to tackle it, you would keep that risk of job security minimum by maximizing your 401k in the early of the year. And the third thing is the cash flows. I mean, in the first few months of the year, you would have already accommodated for the major purchases, and the rest of the year you would have money in your disposal for better planning. So that's something which I definitely do recommend. Hope you like this video. Let me know your sincere thoughts and feedback so I can keep improving. Thank you.